Something happened this week that has never happened before in the entire history of financial markets. A single company raised $75 billion in one day. Its stock jumped 19% on its very first day of trading, and its founder became the world's first trillionaire. SpaceX just went public, and whether you're excited about it, skeptical about it, or just trying to understand what any of this actually means for your money, this video is going to break it all down for you. What happened, how it works, what the risks are, and most importantly, what you should actually do about it. Let's get into it. First, let's talk about what an IPO actually is, because this is where a lot of people get lost. IPO stands for Initial Public Offering. It is the moment when a private company, one that only wealthy insiders and institutions could invest in, before it opens itself up to the public and sells shares on the stock market. Before this week, if you wanted to own a piece of SpaceX, you couldn't. It wasn't available to regular people. Only venture capitalists, private equity funds, and employees could hold shares. The IPO changes that. Now anyone with a brokerage account can buy a piece of SpaceX, which trades on the NASDAQ under the ticker SPCX. Now let's talk about the numbers, because they are genuinely staggering. SpaceX priced its shares at $135 each and sold over 555 million of them, raising $75 billion, the largest amount ever raised in an IPO in history. To put that in perspective, the previous record holder was Saudi Aramco, whose 2019 IPO raised $29.4 billion. SpaceX more than doubled that record in a single day. The stock opened at $150 and closed its first day of trading at just over $160, pushing the total market value of the company to approximately $2.1 trillion. And as for Elon Musk, personally, the IPO made him the first person in human history to reach a net worth exceeding $1 trillion, with Forbes estimating his wealth at approximately $1.1 trillion by the end of trading on June 12th. So what exactly did you buy if you purchased shares on day one? This is where it gets interesting, because SpaceX today is not just a rocket company. It is three very different businesses operating under one roof. The first and most important business is Starlink, the satellite internet division. Starlink generated roughly $11.4 billion in revenue in 2025, making up 61% of SpaceX's total revenue and the only segment currently generating operating profits. Starlink works by launching thousands of small satellites into low Earth orbit and beaming high-speed internet down to subscribers anywhere on the planet, including places where traditional internet never reached. It currently serves millions of subscribers worldwide and is growing fast. The second business is the launch division, the rockets. SpaceX carries satellites, cargo, and astronauts to space for NASA, the Department of Defense, and private companies. Key contracts include a $2.9 billion NASA Artemis human landing system, contract and commercial crew program missions at approximately $133 million per Dragon flight. This business has made SpaceX the dominant force in the space industry, holding enormous market share of US government space contracts. The third business is the newest and most speculative. Earlier this year, SpaceX acquired Elon Musk's AI startup XAY and folded it into the company's AI division. Through this acquisition, SpaceX is now positioning itself to develop data centers in space, what it calls orbital compute infrastructure, potentially launching the first facilities by 2028. This is the moonshot bet that has some analysts extremely excited and others extremely nervous. Now, here is the part of the video where we need to be honest, because a lot of people are going to see a 19% first day pop and think this is free money. It is not. There are real risks here, and you need to understand them before you do anything with your money. The first risk is valuation. At a $1.8 trillion valuation, SpaceX trades at approximately 96 times its 2025 revenue, a multiple that dwarfs even the most richly valued technology companies and implies growth rates that no company in history has actually achieved. That means the stock price is not based on what the company earns today. It is based on what investors believe it could earn in the future. If that future does not arrive on schedule, the stock price could fall significantly. The second risk is profitability. Despite all the revenue, SpaceX reported a net loss of $4.3 billion in just the first quarter of 2026. The accumulated deficit now sits at $41.3 billion, driven largely by the AI division, which posted losses exceeding $6 billion in 2025 alone. The company is burning through cash at a significant rate to fund its ambitions. That is not automatically a death sentence for a growth company. Amazon lost money for years before it became one of the most profitable businesses on earth. But it does mean there is real uncertainty here. The third risk is concentration around one person. Critics have raised concerns about the company's governance profile under Musk, who also runs Tesla and other companies simultaneously. What happens to SpaceX if Musk's attention shifts? What happens if his public controversies affect the brand? These are legitimate questions that investors need to sit with. So what should you actually do? Here is the honest answer. If you are a long-term investor who believes in SpaceX's mission across all three of its businesses, space, satellite, internet, and AI, and you are comfortable holding through significant volatility, buying a small position is not unreasonable. The key word is small. Do not put money into any single stock that you cannot afford to lose. A reasonable approach is to limit any individual stock to no more than 5% of your overall portfolio. If you are a beginner who just started investing, this is not where your first dollars should go. Your first dollars belong in a low-cost S&P 500 index fund, which gives you diversified exposure to hundreds of companies with a proven track record. Build that foundation first. Then, once you have a solid base, you can take a small speculative position in something like SpaceX if it aligns with your goals and risk tolerance. And if you already own an S&P 500 index fund, here's something worth knowing. As SpaceX grows and its market cap increases, it may eventually be added to the S&P 500, which would mean your index fund automatically includes it without you having to do a thing. That is one of the quiet advantages of index investing that most people never think about. The bottom line is this: the SpaceX IPO is genuinely historic. It is the biggest in market history. It has created the world's first trillionaire, and it represents a bet on the future of space, the internet, and artificial intelligence all wrapped into one company. Whether that bet pays off over the next 10 years is something nobody knows for certain. Not the analysts, not the institutions, and not the guy making this video. What we do know is that investing should always be based on your own financial situation, your timeline, and your ability to handle risk, not on hype, not on headlines, and not on a 19% first day pop. Do your research, invest what you can afford, and never let the excitement of a moment override the discipline of a plan. This video is for educational purposes only and is not financial advice.